Good morning. We will pay attention to bank reconciliation today. When the bank reconciliation of the previous month is provided and additional information is given to tell you where mistakes were made. So it's not necessary for you to go and tick off the bank statement with the cash receipts and cash payments journal. All the information will be provided. So first of all, what we have to do is we must determine whether the bank corrected the mistakes or omissions that we wrote down in the previous month. So we will check in the information that they give if all four these entries appear on the current bank statement. If they don't, we will have to show them again on the next bank reconciliation statement. Pay attention to the dates. The bank reconciliation statement that is provided was for the previous month, that was on the 31st of May 2015. We will do a bank reconciliation on the 30th of June 2015 after comparing the cash journals with the bank statement. Then they also give me the total in the cash receipts journal at the end of June and the total in the cash payments journal. I will use the bank balance at the end of May as my opening balance in the bank account, and then I will record the total of the cash receipts and cash payments journal in my bank account as well. I will start in the cash receipts journal with the bank total that was given to me, and I will start in the cash payments journal with the total that was provided. And the bank balance, opening balance, was taken out of the previous bank reconciliation statement. The following amounts appeared in the bank statement for June 2015, but not in the cash receipts journal and cash payments journal. So this appears on the bank statement for June. Now, if we look at the check number 495 and 50 and the deposit, you will see that all three of those amounts appear in the previous bank reconciliation statement. So we already recorded it in the previous month in our journals, but the bank didn't do it by the end of the month. They only completed it in the current month. You will see that all these figures, 530, 320, and 120, are these figures that they completed in the current month. So there's one outstanding amount of 80 Rand. So they must either give us additional information about check number 499 so that we can cancel the check, or we will have to show it again in the next bank reconciliation statement. Remember that the check is valid for 6 months. So it can happen that you will repeat the check every time as an outstanding check until 6 months, and then you will only have to cancel it. If we look at number 4, a deposit does not appear on the bank statement. That means that we've already recorded it in the journals, but the bank will only record it in the next bank statement. So in the bank recon, we have to show this as an outstanding deposit. In the bank reconciliation, we will show that there's an outstanding deposit of 900 Rand. Checks not appearing on the bank statement is check 499 that appeared in the previous bank recon. So it's still not on the bank statement, so we will have to show it again as an outstanding check. Then check 511 and check 521. So all three of these checks will appear in your current bank recon as outstanding checks. In the bank reconciliation statement, we will record all the outstanding checks, so we will show those are the 3 checks that will be paid out by the bank in the future. Charges on the bank statement, there's a service fee of 5 Rand, cash handling fee of 10 Rand, credit card fees of 36. So we have to add them together to see what is the total bank charges. So 36 plus 10 is 46 plus 5 is 51. So my bank charges are 51. Then there's an interest on a credit balance. Interest is always shown separately. It's not added to bank charges. So if we look at the interest, you must make sure that you understand exactly what this interest means. This appears on the bank statement on interest on the credit balance in the bank statement. Now remember, we put things on the debit side that they put on the credit side. So I have to show this 18 Rand as an income to the business that will increase the amount of money in the bank, because in their books it's on the credit side. In our books it must be in the bank account on the debit side. The bank charges will be shown as 51 Rand in the bank, and the bank charges account will be debited with 51. The interest is interest that we receive. Our normal checkbook account is called a current account, so it's interest on current account, and the money in the bank will increase with 18 Rand. A check received from a debtor has been returned by the bank marked RD 240. So when we receive this check, we record it in the cash receipts journal. If this check is returned by the bank, whether it was because of insufficient funds, post-dated check, check that matured, mistake on the check, doesn't matter for what reason they sent the check back, then we must cancel this deposit of the check in the cash payments journal to show that we don't have the money in the bank anymore. In the cash payments journal, I will show that A. Sally is a debtor, so debtors owe me 240 again, and I have 240 Rand less in the bank. W. Nelson deposited the monthly rent directly into the bank account, 300. Enter direct deposit in the cash receipts journal because the money was received and increases the money in the bank, so therefore we will show it in the cash receipts journal. W. Nelson, and we show that the rent income will increase and the money in the bank will increase with 300. A stop order of 120, it's just like a check that was paid out by the business, so we have to record this stop order in the cash payments journal to reduce the amount of money in the bank. In the cash payments journal, we will show that the check was issued to Sanlam to pay insurance, so the expense insurance will be debited and the money in the bank will be reduced with 120 Rand. On 30 June, the bank statement showed a credit balance of 1311. We will always start the bank reconciliation statement with a balance on the last day of the bank statement, because we want to show that if we take their closing balance and we do adjustments in the bank reconciliation, that it will reconcile with my bank account. So we will start the bank reconciliation statement with a balance in the bank statement on the last day of the month. Then we will transfer the total of my cash receipts journal to the debit side of the bank, and we will transfer the total payments to the credit side of the bank and balance my bank account to determine what is the balance in the bank after we did the corrections and emissions. If the balance is on the debit side in the bank account, it will appear on the debit side of my bank reconciliation statement. If all the errors were corrected and all the emissions were completed, then these two totals should be the same, otherwise there's still a mistake. What did we learn? Determine whether the entries in the previous bank reconciliation statement were recorded in the current bank statement. So the entries that we showed in the previous bank reconciliation statement was all the entries that the bank still has to complete. If it appears in the current bank statement, they've only done what we said the previous of the month. they still have to do. If there are any entries that still don't appear on the bank statement, then we have to show it again on the current bank reconciliation statement, because then the bank will do this entry in the future. The bank balance in the previous bank recon must be used as an opening balance in the bank account. The closing balance in the bank account should be entered in the current bank reconciliation statement so that we can determine whether those two balances are equal.